Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's January 22nd. And I'm Frank Curzio. It's the Wall Street Unplugged podcast. We're making the headlines. And tell you what's really moving these markets. Daniel Creech.
Hello, Frank.
What is going on? You have to be a happy camper with Ohio State.
Yes.
I don't know if that's good or bad that you're keeping Ryan Day. I could tell you, though, I was a little nervous because, I said I bet $500.
Yeah.
They were up by 8. I thought it was like, all right, this is the best bet ever. It's an easy bet. And all of a sudden, they get 2 touchdowns, 2-point conversions in the fourth quarter. And they were going to get the ball back, right? And I was like, if this guy loses this game, he's gone tomorrow. He is fired he's fired tonight. He would be fired tonight if he would have lost that game. He really would have. And it's not sad. He knows the job he's getting into. He makes good money and everything. But again, in Michigan. But congratulations, man. It's nice when your freaking team wins, right?
Yeah, well done to the Buckeyes. The only thing on that is I was thinking about you in that because the line was 8.5. Now, forget if it's all fixed because it would ruin our sporting lives. But the line was 8.5. And you're right. When it was 8, I thought it's going to end at 8 and, just that side of the line. The only thing I was upset about was the period you're talking about. When you get the ball back and you're up and you go into this prevent offense, everybody knows the prevent defense term. You run. Thank goodness our freshman bailed us out on the wide receiver stuff. But that kind of play calling, it didn't happen, so let's not get crazy. But if you completely change your play calling, give the ball back, and then something bad would have happened, that just compounds the error. But hey, national champs, congratulations. Did a great job. Very, very good to watch it and happy. I only won a medium little cigar bet because a guy, just a Buckeye hater, wanted to bet a cigar, so I gave up the line too. But you won the real one, so that was good with the $500.
With the field goal. But I could tell you, they were playing, and I hate when teams do this, they were playing not to lose. And this is why I think Belichick is the greatest freaking coach ever, whether you like him or not. He sticks his foot on your throat. And Brady, instead, he play fakes and does these 5-yard passes, and if a guy breaks it through, he gets first down, game over, right? That's what they do. They do very, very... Yeah, it's not, let me hand the ball off, and it's just, now you're losing momentum, and I'm like, man, and I was yelling at them. They didn't have 8 guys in the box. They had 9 guys in the box. I'm like, you have 2 great rushers. I was like, first down play fake, you can lob it. I was like, just please throw it deep. It's wide open, throw it deep. And then you know what? They made a pretty big mistake, Notre Dame, by blitz. They didn't have to blitz there. It was 3rd and 11, right? They didn't really have to blitz there. They should have played like a little bit of a, just regular defense and not blitz.
No, they should have done exactly what they did, Frank. Let's be careful.
Yeah, but that was there, and then they kicked the field goal, and I got lucky. But, everyone says that everyone's pissed off really quick about college and how, the new format sucks, and every game was a blowout. Not every game. It was like 2 good games. I think Arizona State was a great game, and so was, Penn State.
That was crazy.
But I tell you, you could say, like, this format doesn't work and this format sucks, but I could tell you, there's no one that's going to doubt, there's not one person that could say this without fact, that the best team won. Okay? The best team won, and without this format, they wouldn't have got the chance to win because they lost 2 games.
Yeah.
And that now you're going to open up the door where a lot of teams don't like scheduling, because there's a lot of weeks in college football where college football sucks. There's no good games. Seriously, there's like 2 or 3 weeks where there is no good games. There's no top 10 teams playing each other. It'll be like a 5 playing like a 25 or whatever. There's like 2 or 3 weeks that go by, and it makes sense because if you used to lose 1 or 2 games, even 1 game, sometimes you were out of it. Now, look what Ohio State did. I mean, Tennessee, what was it? Tennessee they played? Who was the first game that they played?
Tennessee, Oregon, Texas, Notre Dame.
I mean, Tennessee was a good team.
Yeah.
Oregon's a great team, right? They beat them. I mean, even the schedule that they had to go in to beat all these teams is really, really incredible. 4 games that they won, but good for them. Congratulations. Great for Ryan Day. But the best team wouldn't have won without this format. Yes, a lot of the games sucked. You can't control that. The NCAA tournament sucked the last 2 years. Connecticut won every game by 25 points. Literally, every freaking game they were winning by average of 20 points, right? So the best team won. It was chalk. It was terrible. You're not going to say the NCAA tournament's terrible, so give it a chance here. There's a lot of things you have to do. Don't give buys to Boise State, please. I mean, oh my gosh. But, the format resulted in the best team winning college football, and that wouldn't happen without it. So I know there's a lot of negatives and stuff like that, but at least, that's kind of one of the things you really want to get right. But going from there, I have to make a quick announcement, Daniel. So we're going to do a big crypto event, right? We're very high on crypto, as you guys know. We were really excited. if you're part of our crypto intelligence newsletter a couple of weeks ago, I was saying, listen, Trump's going to have executive orders coming in, and the rumors started going out, and we were buying, and people are doing very good in that newsletter, and it's not just Bitcoin, it's everything else underlying these technologies. They're innovative, they're disruptive, and they're disruptive to the biggest industry, the biggest boys club, which is financials. And now you're going to have a regulatory framework. It's going to result in so much money coming in. We were going to do a live event this Thursday, but we're pushing out to next Thursday. Okay, so it's not going to be this Thursday. We're pushing out to next Thursday. I was debating if I was going to tell you why I'm doing this, but I am going to tell you this because I think there's a lesson to be learned here that I think a lot of businesses sometimes don't understand, especially if you open up your own business. But there's a lot of times when you see us, you see me. You see my name on the door. You see Daniel and I doing the podcast and stuff like that. There's a lot that goes on behind the scenes. And when we do these live events, several people, we wouldn't be able to do them without these people, where it's the design, it's the stuff that you're getting, it's the emails, it's controlling the questions. We do this live, right? And a lot of people I say they do it live. They don't. We do it really live, and everything has to go right. And if it doesn't, it's live, right? So we're going to fuck up. But, one person that does it great is someone that we have here who's, a great employee. His name is Jan. He'll probably hate that I'm mentioning him right now, but he had a death in his family, and he had to go overseas. And he was going to work overseas to get this thing done. And I was like, there's no way that's happening. So, he's such a big part of this, and he loves to do it, that I said, listen, take your time, whatever. And we pushed off a week, which is okay, because it's not going to really make a difference. We're very, very high in crypto. We think it's going to be, just an amazing opportunity for a brand new industry to be born. I know everyone's talking about Bitcoin. You're not going to get rich buying Bitcoin now. You could, if you hold it for like 5 years, but it's very, it's over 100,000, 105,000. We said it was going to go to 100,000. A lot of our predictions have been correct. We've helped people make a lot of money in this industry. There's another 200 cryptos, not the Trump meme, not Fartcoin and stuff like that, right? Daniel, I talk about, if you want to buy that, because, I'm the idiot for not buying it because it's up so much. But I'm just saying, very speculative, risky. Without that, if you take the next 100, 200, these are great technologies that I've researched for 7, 8, 9 years that a lot of money hasn't poured into them institutional-wise because there was no framework around it, where the SEC was allowed to go after any company that they wanted. They basically like, oh, we don't like that guy, we're going after him. Because it was so broad, it was so vague, the rules, and now that's changing, with trillions of dollars going to flow into this industry. And it's going to be very exciting. And the point I wanted to make, a few things here, is one is we're going to have our crypto event, live event, next Thursday at 7 p.m. So if that's January 30th, if you want to register, go to CurzioCrypto.com. You can put your questions in there. We're going to answer quickly, have a live Q&A. So probably like a 10, 15 minute going over catalysts that you haven't heard before that are going to blow you away. I'm going to make this very easy to understand of why it's inevitable that Bitcoin is going higher, but you're going to see these underlying technologies with the new framework around it. It's really incredible what's going on in this industry. Seriously, it's going to be insane, and you have to have money in this industry. Your speculative money, you have to have speculative money in this industry. Money you can afford to lose, because the returns are so much greater than you can get anyplace else in terms of the risk reward. And so Curzio Crypto to register January 30, 7 p.m. I just, don't want to forget saying that to you guys, because next week. But I'm telling you this, and why we pushed it out, because a lot of you own your own businesses and listen to this podcast, and you need to remember that your employees are your backbone. And when you look at your job, think about it, of how long you're at your job. You're basically awake on average, maybe 14 hours a day, maybe 15 hours a day, maybe 13 hours a day. And most jobs you're working, pre-COVID non-government jobs, you're working, 40-hour weeks, sometimes 45-hour weeks, sometimes 50-hour weeks. Of course, when you own your business, you work even more, but your employees are working, they're spending more than half of their lives that they're awake at their job. And if you have a shitty job you don't like, please try to get one that you like, because it's most of your life that you're there. And I think, as what I've learned and what I've learned from other people, like some of my mentors that have helped me when I ran my business, is taking care of your employees and making sure that they're appreciated. And sometimes I could do even more on that front, but just make sure that you do that. Make sure that they know you respect them, because they're the backbone, the lifeblood in the company. Without them, you're not going to be able to grow. You need employees to grow. It's always hard, small business. You want to have hands-on, do everything yourself. You're going to have to let go of those reins and get people that you trust. And of course, money's a big issue and stuff like that, but sometimes it doesn't really come down to that. It just comes down to calling them and saying, hey, you know what, thanks a lot for what you did, or a personal phone call from CEO, whatever. It's a really, really big deal. But don't forget that, because you're not going to be able to grow your business without great employees. you might be able to have a really cool business and sometimes you could generate 5-10 million in revenue with a staff of 5 or 3 or 4, whatever. It's not often that happens, but to really grow and really scale, you need the right people in the right place and good employees and stuff like that. And sometimes that goes, sometimes I think, even for my sake or whatever, sometimes not that you forget it, but you just want to make sure that you take care of your employees and stuff like that because it's such a big part of your business. And again, they're there like most of their lives. So try to make that environment very cool, nice, fun. And hopefully that is for everyone else other than Daniel Creech. But
yeah,
that's
exactly.
What I'm saying.
Yeah.
Which Daniel Creech, I love Daniel because we always do sound
very
checks.
Nice.
I hope I got this. I don't think I got this, but I'm going to play this. We do a sound check really quick.
The real.
We always do all right, Daniel. Let's do a sound check before we actually come on. So we always try to be creative and funny, but this is Daniel's sound check. I think I'm going to be able to get this. If not, I hope I can get this because this is going to be pretty cool.
Happy winter.
Let me see if I can get this. Okay, here we go. This is our sound check. So this is the real Daniel that you guys know, right? The real Daniel. Here it comes.
22nd January. Snowing in Florida, Frank. I'm bummed I wasn't on the island because they got flurries.
They did. Yeah, they got a little
I know.
bit of snow.
I got some pictures. People sent me there. I wish, because man, I would have gone to the beach. That'd be awesome to go to the beach and see snow flurries.
Yeah, a lot of people did.
But you fucking moved me to Jacksonville. So guess what? No snow day.
I love
testing,
it.
1, 2,
I love
3,
it.
testing,
That's
1, 2,
our
3,
testing.
testing.
So that's our whole testing and everything, which is pretty funny. So that's the real day. But you
More than one
Which is
place
great.
right now.
Which is
people
great.
are listening to this.
Oh, it's just
After your nice words about employees, Frank, people are going, I can't believe some people get paid to do what they do.
it's just fun. So so I wanted to start off with that. Just listen, the event's gonna be next Thursday, guys. So it's gonna be next Thursday. It's gonna be awesome. It's gonna be live. And again, we really make this interesting, and you could ask questions and stuff like that. So feel free, if you register now, you can ask your questions on a first time we see them. So if you register, it's absolutely for free. And, we're going to probably offer a nice special price for our newsletter, which we always do because we have lots of good ideas. And we just recommend a really good idea. And it's only up a little bit. I think it's going to go up a lot higher. Or you can just listen. But usually when people go on that, we make it entertaining. We have a couple of beers, have fun, and answer lots of questions. And, so if you want to join, go ahead. Go to cryptocurzio.com to register. It's January 30th. At 7 p.m., and that is next Thursday. And also, a couple of things for crypto. I don't know if you saw it. We'll get into Davos a little bit more, Dan, but did you see Brian Moynihan's comments from Bank of America at Davos?
Well, just the payments comment you're talking?
Yeah. He goes, the U.S. banking industry will embrace cryptocurrencies for payments if the regulators allow it, which they're going to allow it. He goes, but the U.S. banking industry will embrace cryptocurrencies for payments. Guys, this is like, trillions. Like all of this is opening up right now. We're just talking about like all this stuff is opening up incredibly. And it's just the beginning when you have a framework and you need the framework. We haven't had that. And you can't throw in tons of money from venture, from institutions, for, these innovative technologies, which these are software companies, these cryptos. A lot of these coins are software companies. And you can't have that unless you have a framework because, that takes a lot of the risk out. Otherwise, you could throw money in there and they could be like, nah, we're just going to come after you and we're going to close this or whatever for any reason. And that's why you rarely see Ripple, Coinbase, these companies. Usually they settle with the SEC and say, okay, we're not admitting anything and we settle. They weren't settling. They were fighting. They were fighting the SEC going, F you. We went to you and you told us to do this and we did it. And now you're still coming after us. Okay, so now a lot of that is removed. And holy cow, these Trump executive orders of Brian Moynihan, again, this industry is going to open up incredibly. It's trillions are going to flow into this industry over the next 3 years and then continue to flow and going forward because now we have the framework, right? Just this brand new industry opening up. I'm not talking about the memes, but it's just very disruptive to the financial industry. That's why these banking CEOs are all kind of saying, hey, you know what? They kind of adopted it ETFs because it's so disruptive to their natural business, which always had a moat around it, protective through lobbyists, big money, boys club, right? All this stuff. Now you're unleashing this thing and it's unleashed. It's unleashed. The regulatory framework was the last part of it. And man, you got to be in some of these things. Something I've been studying for a very, very long time, 16, 17. And there's so many names that could generate massive returns for you in this industry. If you follow the right people, if you're looking at the token economics and you do all this stuff, and we've had a formula that works really, really well. It's been doing very good for our investors for a long time. And, I think now it's time to really, really get in. So, so I'm doing my own money. I have money in crypto. I had it in there for a long time. I'm increasing my staking to crypto, but I think it's very, very positive here. And just you're seeing more and more news come out, which is cool. And not only that, I think with every industry, you always want to have the negatives. It's kind of like the economy, right? If everyone's like, everything's great, so you always want to have the naysayers, right? It's like this Goldilocks thing that this pull, and it's nice because it puts everything in check. And when you have the Frank Gisters and Peter Schiff's constantly, just making fun of the Bitcoin people for making so much money, it's good. It's actually good. It's instead of, I used to get so angry at them, and now I just, every time they come out with posts, I buy more, and I just make a fortune off of them. So that's what you do. Instead of getting pissed off, just use your advantage. I mean, these are guys that are absolutely freaking so wealthy, it's a joke, but everyone that follows them is poor than shit because they've been so wrong. And that's what I hate about the industry. I don't mind if you go down with your ship. That's fine. I have no problem with that. I have no problem with Dick Fole going down with the ship with Lehman. Most of his wealth tied to that. I have no problem with that. I have a problem where you're telling everyone that something sucks, but you continue to make a fortune while everyone listening to you gets annihilated. And these two guys have done it, again. Instead of me getting angry and ranting about it, just whenever they post, I buy more.
That's good.
And been doing it since, for a while. And man, these guys have been bearish since 5,000, 10,000, 20,000, 60,000, 70,000, 100,000, 105,000. And at $200,000, $300,000 Bitcoin, they're still going to be bearish. And that's okay. That's okay.
When Bitcoin drops from $500,000 to 300, they're going to go, see?
Yeah.
I told you so, Frank.
I told you I was right.
I told you so, Frank.
I know. It's definitely true. So Trump's executive orders.
Yeah.
Some pretty big ones. You can go there, right?
Yeah. The big one I want to talk about, of course, is energy and the reaction to it, because oil has sold off a little bit. Mm-hmm. The price of oil, which is a good thing, and everybody's worried about kind of recessions and such like that, demand. I understand that. I just continue to think, listen, when you sign an executive order, it gets great attention, and that's what it's supposed to do. And I love the fact that they are saying, hey, we're going to try to increase production. We're going to do all this. We just have to, I hate, Frank, we try not to be on the fence because people listen to us because they want us to take a stand. With this situation, I'm sorry to play kind of sitting on the fence here, but I don't think Trump's going to be as negative for energy as a lot of people or the street thinks right now. But honestly, instead of just guessing, we have to kind of wait and see. And I hate that. It is aggravating, to be honest with you. But listen, it's the same old story of supply and demand and what's going to happen. I do think what's frustrating for me, Frank, is I can't measure this. And I use this analogy because I thought you were correct in saying, listen, when you're trying to get people excited about AI, you were explaining, listen, you're not going to just see AI as a balance sheet line item and say, oh, look, here's what AI did for us, plus or minus. And I say that because Jamie Dimon's comments, business leader comments, Bank of America comments, anybody, Goldman Sachs, anybody that you listen to talks about this change in CEO's mentality, in this animal spirits. Stanley, we don't know his last name, hedge fund guy, has talked about the animal spirits and everything. And I am frustrated because I can't measure that. But I want to tell investors that, I would look to be a buyer before a seller, because I know asset prices, we can argue about valuations and we have to grow. And there's a lot of negativity. As Frank just said, don't ignore the negativity, use it to your advantage, be aware of it. But it's just like AI isn't a line item. Trump is not a line item on a measurability scale, because the guy can say floor to anything. He can come out tomorrow and, hey, Frank, crypto task force. Now the SEC, headed by who you interviewed, Hester Pierce, or
yeah,
is it Pierce? Is that how you say it?
Yep, Pierce. She's great.
Anyway, she's heading this crypto task force now. And it's just, it is pushing asset markets up. I would still be more bullish than bearish. Again, not to just ignore all the negativity, but the executive orders, I don't know how you argue these are not positive momentum to the upside, not the downside.
Yeah, no, absolutely. And when it comes to energy, look, we talked oil on our paid podcast, right? Which is, the one we do on Thursdays, which is really cool. So, which we have a lot of fun with, so I think it's $10 a month, right? So, which again, that pricing is going to change. We're going to restructure a lot of stuff within our newsletters and stuff pretty soon, just to let you guys know. Make it more affordable for everyone to own more products and things like that. And the prices on the bottom end are probably going to go up. But when we talked about oil, I think this was last week or the week before, I think there's this thing where, okay, you have him coming out saying we're going to halt offshore wind projects, good for oil, good for fossil fuels, but it means more production. More production means low oil prices. But remember, there's all this oil production. It's all about, supply and demand. So if you think all this oil production is going to come online and oil's going to go to 50, a lot of this oil is not going to come online because a lot of oil companies can't produce and make huge margins at $50 oil. Some of them can, and some of them all have areas that do $35 oil and even $30 oil, and some of them tiny bit below $20, believe it or not. So, but most can't. You can't scale, right? You can't really scale at like 40, 45, 50. It's dangerous to scale at 50 because if prices fall right away, again, you could hedge them and stuff like that. I don't think you can hedge them at 50 where we're at 80 right now. It's 75, 80. But the point is the last time Trump was president, oil prices went a lot higher. Okay, and the same thing happened, and we increased production. So that's one thing, right? We just want to look at the data. Another thing is, yes, more production might be bad for the producers, but if you're looking at more production, the only way you get more production is by the service companies. The service companies are going to get more contracts. They're going to make more money off of it. Now you talk about Schlumberger. They just reported pretty solid numbers. Stock popped 7%. It was off its 52-week lows. These are names that have gotten annihilated. And what do? You think like companies off their 52-week low, near the 52-week low are, bad standing, balance sheet. These balance sheets are fantastic. They lowered their cost. The oil industry is so different. It's kind of like the technology industry in their balance sheets. People already forgot that a lot of these names almost went under during the .com. And the ones that survived, they lived through that shit and like, oh my God, we almost lost our company. Netflix, this close to losing their company. We'll get to them in a minute. And when you do that now, same thing. When that's why even you go through the financial crisis and that credit crisis. And these companies, even though oil is coming down, they're very efficient. So Schlumberger, 52-week low, popped 7%, decent numbers, and they increased their dividend. How many stocks did 52-week low are increasing their dividend? Technical analysts say with that stock right now, if it breaks 45, it's going to go a lot higher. I think it's like 42-ish, but it's up off its lows. You see a clear trend well off its lows. Schlumberger, Halliburton, cheap names, and you don't want to buy cheap just to buy cheap because cheap names get cheaper. You want to see a growth catalyst, and they have growth potential here because they're going to get lots of contracts if people are drilling more. These are the companies that benefit. There's different facets to the oil industry. It's not just these producers, and the producers are going to get annihilated. These guys are going to get tons of contracts to drill more, to use their equipment. And I don't think they've seen this kind of growth within this cycle that's about to take place over the next couple of years. Baker Hughes, I have to look more into it, but I was looking at a chart of these three stocks. And if you look at Baker Hughes, because over the past year, Schlumberger and Halliburton were down 15% each over the past 12 months. Baker Hughes is up 50%. I don't know why. I'd have to look more into that. Just, again, better contracts, whatever. I know Schlumberger is, and even Halliburton, I think, but Schlumberger especially is more international. But these are names that I would look at in the oil industry on that executive order. Another thing with Trump's executive orders is the AI infrastructure deal. So it's $500 million investments from Oracle, Larry Ellison, OpenAI, Sam Altman, and SoftBank, the CEO of SoftBank. I have to say this, and this is so rude. I don't think I've ever seen someone so powerful that's so short. Did you see how short that guy is? That guy's like 3.5 feet tall. He's a little bit bigger than that, but I'm exaggerating. But short, yeah. And he was cool, and he's just like, and that guy's like, oh my God. And everyone, SoftBank is
Trump's tall. Ellison looks tall. I don't know how tall Larry Ellison is.
Yeah, I don't know, but Ellison has been a huge. I didn't realize this, but Ellison is a huge donor to Trump, and it's kind of usually when you donate, a lot of times you want to keep it. Like even Bill Gates. Bill Gates been his best.
They've been friends for years. Like he's been under the radar. Like he's been a Trump fan for as long as I can remember. I was surprised
when I saw the numbers of how much he donated, and just like with Gates, like Gates was kind of like, all right, I don't think he wanted to know how much he was donating, and that came out, and he was a little pissed off, but. Yeah, sometimes they just don't want people to know, but I was surprised when I saw that and somebody told me that how much Ellison.
Bill Gates is the most homely looking villain on this earth, probably.
I know you don't like that guy at all.
I don't. He looks like who's that character, your neighbor? Is it with a horse? What's everybody say?
I don't know.
Oh, your neighbor.
You got me on that one. I'm stumped.
Yeah. Anyway, moving on. Not important.
Moving on. But you look at AI, infrastructure investments, that's great, so again, AI, we cover that in our newsletter. It's a massive trend. You're seeing tons of money get thrown into this industry. It's continuing. It's not, being lowered. I could tell you that, a lot of this is going to be from the biggest companies, who are going to benefit the most, and that's why they're throwing the most money into there. Because even going to the Consumer Electronics Show, you see a lot of companies using it. We're trying to find companies in small cap land that actually are benefiting from it and using it and have been using it. Not just say they're going to use it because everyone fucking says they're using AI. We're all using AI. AI is going to be great. It's awesome. It's just, but there's some people that have been doing this for several years, and light years ahead of everyone else. And these are the companies that are going to get taken over because now with the Trump presidency, what do we have is the M&A environment is going to be really, really strong. It's already strong. There's already been lots of announcements in the first month when 2024 has been a horrible year for M&A. We're going to see this take off tremendously because, the current Justice Department, you could be like, hey, a food company is taking over an oil company and they'd be like, nope, no matter what it is, it's no. The answer is absolutely fucking no. And without even looking at the details. I mean, you know, so now it's going to be different. You know, of course, you got to worry about monopoly and issues and stuff like that. And again, you don't want two large companies in the world merging, right, and getting together. But you're going to see a lot more deals. It's going to be easier to go through that process and a lot more M&A announcements, which makes sense. And yeah, I think things like that, Daniel, not being factored into the market right now because, you know, market is at all-time highs. The S&P hitting an all-time high. You know, the M&A market's good. At Davos, we had a couple more people talk and say, okay, you know, the market, who was it? It was the CEO from Goldman came out and he said, David Solomon, he's like, you know, the economy's in a good place. Hard to dispute that equity multiples are high. He said Bitcoin's a speculative asset. He's a big believer in the U.S. dollar. Of course, he's going to say that because Bitcoin threatens this institution. Jamie Dimon said that the market's kind of inflated as the stock's at an all-time high. He said he hugged out with Elon Musk, which I thought was pretty cool. We can get that, whatever. But yeah, everyone getting along now. Even Gates like had a meeting with Trump and all the tech. Everyone's kind of getting along right now. Even countries and stuff like that. Japan sent like its vice president for the first time.
Well, they're at least doing the right thing and showing
China,
that,
something like they sent its vice president. So, you know, but if you're looking at everyone talking about the economy and valuations are high, they're high, but we're seeing earnings really strong, sales really strong. We're seeing a much better regulatory environment. You got to throw that into the mix, guys. Are we expensive? Yes, but there's a lot of positive factors here. I mean, GDP just got raised tremendously, right? So, you know, you're looking at these numbers. Is it expensive? Yes. Is everything doing well? No. And we can cover that now because one of the stocks that are doing very, very well, I don't know if you wanted to continue the Trump thing, if you had anything to follow up on that, but, you know, I did want to start talking about Netflix, which is, you know, just amazing company. I mean, this thing is up, I think it's up like 12, 13% today. You know, going through the roof. They just reported earnings last night, and yeah, I don't know if you saw those numbers were fantastic. So
no, go ahead. We can circle back. Go. You're on a roll with Netflix. They were impressive. I don't even care about Netflix, and when I read through it, I was like, okay.
Yeah.
And let's just remember, I'm the one that sold out a $1 stock club a long time ago, so we had a great gain. But boy, if we would have just Florida held on to that, it'd be a lot better.
I still have that from my mom's.
Moving on.
That and Amazon. The only two real stocks, that and the S&P 500 I own. I have everything else in like, you know, 4% yield for my mom. But those are two stocks that, you know, the only two stocks that I have in there other than the S&P 500. But, you know, reported their first revenue quarter of $10 billion. Guidance, you could say on a negative, was a little bit weak. But it's easy to overlook that because they freaking added 18 million subscribers. To put that in perspective, it's only supposed to add 5 million. Right? So these guys monetize the shit out of their subscribers over time. They're great at doing it. They have pricing power since they have the best original new content, right? New content by far than any other streaming platform. And it's just starting the ad platform, which is going to be a monster. They've been announcing this to be patient with it. But in 2025, their first full year, their ad platform, new division, Daniel, brand new division. Man. Again, they've been built up for like a year and a half, 2 years. But this is a new division. The first full year of that sales in that division is going to be $3.5 billion. That's 10% of their sales. Okay, in 5 years, it's going to be 25%. This is a brand new division. This is the equivalent of Amazon, Google, Microsoft starting cloud.
Their cloud, yeah.
Or their cloud division. Because you have monster margins when it comes to revenue. And they're getting this right, and they're going to have pricing power, and people don't mind watching commercials if you have great content, which, as long as the commercials are pretty good as well and not crazy, which sometimes you see on YouTube and they go over the top liberal and stuff like that, and leftish. But, you know, and the Super Bowl is a good example of that. But you're going to watch this content. And again, they have pricing power because they have the best content out of any streaming platform. Kudos to Barclays. Because Barclays came out and they upgraded Netflix from underweight to equal weight. And I say kudos to them because they got it wrong. Guys, we all get it wrong sometimes. We all get it wrong sometimes. I don't care who you are. Buffett gets it wrong. I don't give anyone. David Tepper got it wrong. A lot of people get it wrong. Okay, but when you get it wrong, just say you get it wrong. I got it wrong. I fucked up. I got to do better. Okay, then saying, oh, well, I was early. And people, I hate people when they stay on it. They just stay on this like, oh, this is bullshit. And they're just finding reasons they hate it. But like I said, look, we're wrong. Given this backdrop, they have clearly been wrong on Netflix. And while the valuation is stratospheric, the premium evaluation is a function of the company's execution quality. Good job. All right, you were wrong, and you said you're wrong. That's what people want to hear in our industry because everyone's full of shit when it comes to Wall Street. If you're wrong, just say you're wrong and move on. You got to be right more than you're wrong, or people are not going to listen to a lot of things. You're not going to listen to this podcast. You're not going to follow people. But you're going to get it wrong sometimes. And a lot of times, it's when the things you have the most conviction on because you don't see it. I'm telling you from past experience. But good job to Barclays. The one thing I'm going to disagree with them is they say the valuation has been in the stratosphere. I'm going to tell you something. what I learned from making my mistakes. And people say, Frank, you're so smart when it comes to stocks and stuff like that. Let me tell you something. I'm smart because I was wrong a lot, okay? Getting to this point in 30 years. And one of the things I've got wrong with Netflix, one of the things I've got wrong, which allowed us and allowed you got on Palantir, and I'm telling you, this stock's going 100. People are like, it's trading at 160 times valuation. I'm like, you don't understand that they could help every single company. Their total addressable market is probably 25 times bigger than what's being addressed, what people are modeling for right now. Because when you have a company like Chevron, and Chevron's like all in on them, when you got the CEO of Chevron, one of the large oil companies, to sit down Palantir with the CEO and just come on free and say, this company's did more for us than they've ever done, more efficient, more. Every single company needs that, okay? We're just talking about a $2-3 billion opportunity in oil, and they're open to all these industries. So with Netflix, I'm going to try to explain this to you really quick. And Daniel, just give me a second here. Because when we look on the thesis, this is why I never understood the bullish thesis on Disney. Okay, Disney could go a little bit higher, but I'm like, why buy Disney when you can buy Netflix? Because you look at Disney, they're going to say Disney's cheap. We're trading at a 22 times multiple for the S&P 500. Right now, Disney's trading around 20 times. They project to grow earnings at 11%. That's a 1.8 price to earnings growth ratio. You have to look at the growth of a company, because without looking at growth, you could be trading 5 times earnings and be super expensive if you're going to lose money, or you're barely going to make money, or growth's going to slow dramatically. And you could be cheap trading at 35 times earnings, which Netflix is currently trading at if you're growing earnings very, very fast. Now, when you look at Netflix, they're trading at 35 times forward earnings. Holy shit, sell it. Sell it. People, if based on a PE, you should have sold Netflix. It's at 1,000. You should have sold it at 60. I'm not even kidding you. I'm not even kidding. Go 68, because back then that PE ratio was over 100, 120, 150, and I missed it. Okay? And the reason why I'm not missing it now, the reason why it's in my mom's account, the reason why we had in our account, I'm not going to tell you who sold it. Somebody mentioned, I'm not going to say it. Anyway. Listen, you cannot get pissed when you sell at a really good gain. So that's first of all. So that's okay. But Netflix trading 35 times forward earnings. On that basis, it's freaking expensive PE. But they're projected to grow their earnings at 30% annually over the next 2 years. They're just starting their ad platform. So their PG ratio is a 1.1, okay, which is a significant discount when you're factoring growth to Disney. They're not trading in this stratification. This way, when you're looking at the S&P 500, there's earnings are going to go over, and there's companies. There's more separation I'm seeing in the S&P 500 than I've ever seen. Usually, like, again, tide lifts all boats. You're seeing there's a lot of companies not doing good right now, 52-week lows. A lot of them. Okay, so not everyone's like just going through the roof here, but if you're looking at the market as a whole, where our economy is growing and the growth that's coming in some of these companies, you have to look at the growth. They have an advertising platform that's going to grow tremendously with massive margins. Okay, it's not even factored in. Plus, they're still killing it in their traditional business because they're adding 18 million subscribers compared to 5 million. So many catalysts. You have live sports. You have great new content for Netflix. Probably spending 3 to 4 times more on new content than Disney. Again, that ad platform, nobody's going to care about watching ads when you have great content. But when I look at Disney, I'm watching a 35-second video on ESPN when only to watch a 25-second highlight of something. I mean, I go to YouTube to watch my highlights now. I never go to ESPN because you only have to sit through probably, sometimes it's 5 seconds, sometimes it's 15 seconds, and then you can watch the highlight. But seriously, it's 30 seconds. You have to sit through an ad on ESPN. Or if you go to ESPN right now, you click one of those videos, and it's just like, Steph Curry dribbling or whatever. You see a highlight of a dunk or whatever, a touchdown. You have to sit through a 30-second ad to watch pretty much sometimes a 25-second, 30-second clip. And I pounded the table on this during COVID, saying that Disney is a fucking disaster. It was a disaster. And people were like, it's going through the roof. It's a great thing. And again, they padded their numbers. They said, let's just add people. Don't worry about average revenue per user. Let's just get all these people on a platform, hundreds of millions, and oh my God. And they weren't able to monetize it. Nobody paid attention. Okay, if you look at since then, Netflix is up 210%. I got a chart over here. Since COVID, right? Since January 2020. So this is 5 years. You have Disney's down 28% since then. I think you'd be hard pressed to find any S&P 500 stock that's down.
How much was Netflix up
since
versus
January?
Disney down?
210% in the last 5 years. Disney's down 28%.
Ooh.
Okay, I don't know if you'll find another stock that's down since then. And if you look at Disney, also, it's down since pretty much September. And that's when the market rebounded tremendously, right? The market's starting to come back. So September 2020, I don't think you'll find another company in the S&P 500 that's down since September. August, September 2020 until now, I bet you'd be challenged to find an S&P 500 stock that's down over that time period. Everything's gone up since then. So, when I look at this chart, even the S&P 500 is up 94%. So Netflix doubled that. But when you look at the detail, you never bought Netflix based on the PE ratio because it was trading expense PE ratio, but they're growing much faster than everyone. They're the best platform. And I got to tell you, Daniel, when I look at Disney, what do you think the market cap is for Disney? Do you know? Have any idea?
I don't know.
$200 billion.
Okay.
Netflix is now over $400 billion.
Ooh.
If I was Netflix, I would buy Disney right now. It's going to get approved easily, right? It's going to get approved. You have other streaming platforms for competitors. It would never got approved, but now you're going to get approved. And this is why they should, because when you have a competitor buying, it's easy to break up the company and get rid of divisions.
This.
Okay, it's
Frank,
very easy. It's very hard to do it internally because listen, you're talking. The people who are running these divisions. You go out to dinner, you hang. It's not as easy to do. I know it's a business decision. It's not as easy. But another company coming in is gonna be like, this is garbage. This is shit. This is whatever. If Netflix buys Disney, they spin off ESPN. They spin off all the networks. They spin off Pixar. They spin off the betting division. All this shit is probably worth 60 to 70% of their market cap right now individually, at least. Right? So you get rid of that bullshit, which Disney's, just running all that stuff and having trouble with ESPN. Get whatever. I mean, easily over $100 billion, probably $150 billion for it, if you spin it off, right? If you really spin it off and you make these things go public separately. You keep its parks. You're getting control of the greatest writers and creators in the world, which fits perfectly into Netflix. Okay, these are the greatest writers in the world. That's the holy grail for Disney, right? They got away from that in streaming and all this bullshit and again, all craziness and left liberal stuff, right? And which families hated, which is their core market. You integrate all the content on their platform. Holy shit. I mean, this thing is a juggernaut, right? And now you keep all the theme parks and you integrate all these themes into all the theme parks. Holy shit. Because right now you could do that. You could get Disney for $250 million and they, again, I don't know what the structure is. I don't know if everyone's going to vote. It's going to be a lot of shit going on, but Disney will never get streaming right. They can't get streaming right. Their best content doesn't go on there. They're never going to change that. It goes out in the movies. For Netflix, this is a massive asset. And what do you need? What's the most valuable thing? People that can create, because we have an unlimited platform that we could just send out new content, but it's hard to get creative and get great stories. And they're the best storytellers in the world. You're going to get all that for free. You're getting all these other divisions that other people want that you could really shed very easily. Man, I just think Netflix right now, it's never been a better opportunity for them to buy them. I think that stock will go through. I mean, Disney should be a $500 billion company, but it's not run right, and it'll never be run right because it's just their streaming division. They can't make money on it, and Netflix can make a fortune off of it because they'll do the right thing, and they'll benefit. And now you see the benefit of all the parks and everything else. Holy cow! I just think it's a good idea. Call me crazy. I think it's a good idea, and I think it'll be really good for Disney because I know they want Apple to buy them, but there's just not enough integration with Apple and all this stuff, and Apple really doesn't care because $200 billion to them, they made that like yesterday.
Yeah,
I think it. To them it doesn't move the needle. This turns Netflix into $1 trillion company. It does within like 2 years, and so for me that's what I would do with Netflix and really try to work with Disney because they do have great content, but they have great older content. Maybe that fits well with Netflix, but just the storytellers, the writers, content creators. I mean, it's so massive for them. I think it just makes sense to me. It really does make sense. And now when you have the right administration in there that's going to approve a lot of M&A deals, this will go through pretty easily, especially if you're shedding off a lot of these other divisions.
Yeah, I'll be interested to see how the live sports unfolds and evolves onto Netflix because as a consumer, and I'm not in this basket, so I'd be curious for you consumers and such out there. I don't have any streaming platforms or anything, but I know Netflix raised the lower end pricing tier by only $1, I believe, which is nothing. That's not going to hurt anybody. But they have WWE, they have football. I know they had some NFL games on Christmas, but it'll be interesting to see how that transition or evolution happens because obviously, again, I don't even own a TV, so I'm not the market they're going after. However, when I make a point to go out to places, Frank, and watch something, it is what? It is live sports. That's really the only thing that demands, you go watch it live. Because the worst thing in the world, Frank, is to tape something and then have one of your friends or family members text you during something, or you go to watch the recording and you see the highlight or a quick thing. Hey, the Buckeyes won the national title, and you're burning your house down because you wanted to watch the game.
Yep.
But when they announced WWE, and I know that's a funny thing and all that, but don't laugh at the billionaire. Oh my God,
massive.
It's amazing.
Oh my God, it's so massive.
It's amazing.
Cow. It really
and it's entertainment. Yep. And they booed Hulk Hogan on the debut. They booed Hulk Hogan. Imagine that. Now, they were out in California, so maybe that has something to do with it. Yeah, but it was still hilarious. I mean,
a little bit.
I kind of had to enjoy that. And yeah, just to see the sports. But obviously, going through that quarter was just amazing. I like your going out on a limb, and we should start that. We should get a social media campaign going on about buying Disney.
Yeah, I think Netflix. I just think it makes sense for them right now because Disney is just it's a very poorly run company right now. It really is a very poorly run company. And I know that they're doing better in terms of making money streaming because they lowered their content spend. I know they're focusing on their dividend. I don't care about your dividend. I want growth here. I can get dividend from any stocks. I can go to Interactive Brokers and park it there and get 4.5% for nothing risk-free. So I don't really care about their dividend. Their main growth engine and to Disney is streaming, and they'll never get that right. They can't get it right. So for me, when I look at this company, it makes sense. Netflix could really turn this thing around, and you have all these divisions, and they're going to make the hard decisions that Disney will never make, like get rid of ESPN, like just spin off ESPN. Okay, it is a valuable asset. It is a huge asset. They have tons of users. The gambling phenomenon. I mean, holy cow, is every single sports franchise in bed with betting, which is a nightmare because nobody, I would say less than 0.5% of people who gamble make money.
Stop. You just won.
Make money.
You're a winner. You just made money. Because of the Buckeyes.
I made money in the Buckeyes,
Stop
right?
the conversation.
And I made money horse racing and things like that. But I'm not betting every race. I'm not gambling. But it's forcing this gambling, and most people lose. I mean, I can't tell you the crisis is going to be like 5 years from now when it comes to so many people gambling on sports and losing so much money. And it's a crisis right now that people aren't talking about, but nobody cares because you're making money off of it. That's it. They're forcing it. When you have like Charles Barkley and you have guys talking about betting while the game's going on and saying, right now you could bet the third quarter, even in basketball, it's really crazy how they're forcing it down your throat and making it legal. And again, it's just, I remember the day when sports companies were like, look at Pete Rose, right, for gambling.
Yeah.
They were just like, don't ever freaking gamble. Never. That's that part of sports. Now, as soon as you can make money off it, the whole world changes. And they don't really give a shit about you. They don't give a shit about people losing their lives and their homes. And gambling.
I do think it's important to point out, though, and thank goodness for government regulation and oversight, because I don't think that civilization would be able to prosper or move on without them. I mean, these geniuses are just amazing. And if you notice, Frank, at the bottom of all these bets and slips and advertisements, thank goodness we have the heart to put, if you're a gambling addict, call 1-800 we don't care. That's amazing. I love that. I just love that.
I love that.
It's essential to the wonderful government overlords making sure that you are all clean, because if there was no sign in the bathroom that said employees must wash hands, think how dirty and disgusting we would be as a nation. For Florida's sakes, people.
They got the regulate, especially with planes, that they go every single flight. If you crash and you happen to crash and you're alive in water, make sure you have to agree to it when you're in, right?
Yeah.
When you're in
exit rows.
The exit rows. Okay. You have to actually verbally agree. Like, you got to pull out the door, every single flight. I mean, you want to talk about annoying that they have to do that and put this over your nose and this and that, whatever. I mean, the chance of that happening is probably 0.05%. And every single time just because some idiot was like, you got to say it. You got to say it or you're going to get fined.
Yep.
Right? So now they got to say it, and you got to get the verbal confirmation that if you crash and you crash into an ocean and you happen to live, pull this out so the raft goes out and make sure you help the person.
You have to assist passengers before you get off. You can't just open the door and lead the way.
Yeah, I'm fucking out of there. I don't know about you.
Now imagine me. I'm tall.
Yeah.
I'm big.
Who's going to go? Yeah.
I take up the doorway. So now I open the door for people. I do sit in the exit row a lot. Unlike somebody else over there in first class, I'm responsible for the door. What if I'm blocking? How the hell am I going to get out of your way and be like, hey, this is the way? As water's rushing in, or flames, or some piece of the engine. Anyway.
Did you ever see Shane Gillis? Did you see that skit? It's so funny. If you haven't seen it,
I know of him. I don't know what.
Just go on YouTube or TikTok, which is back on. Thank God. I'm so glad that TikTok's back on. I'm just so pissed. Anyway, one of my favorite platforms in the world. It's the best way I identify with my teenage daughters is sending them funny clips and stuff like that. So,
well, that's true.
You know, but and very useful too, by the way, if anything. So, but he has a clip where the plane's going down and stuff like that, and everyone's calling, "Oh my God, I'm gonna die!" And it's they're like, if you have to call your loved ones, and he calls someone, he just starts like cursing at him. He's like, "F you, man! I'm up, F you, whatever." They're like, "What are you doing?" He's like, "I'm not gonna call people that I like." He's like, "I call everyone who's an asshole," and everyone's like, "Yeah," and everyone starts calling. And
get my bucket list off.
Yeah, and then they're like, "The flight's not gonna crash," and they're like, "Oh shit!"
Yeah.
He's pretty funny.
That is funny. I'll have to look that up.
He's a big Notre Dame fan. That was tough for him. But anyway, what we said earlier, Daniel, you know, is that not everything's great. You see the S&P 500 doing well, Trump bump, oh my God, and all these executive orders, and everything's fantastic. It's not all fantastic out there, guys. Got to look under the hood. Ford, another downgrade. Barclays, shouldn't be surprising. We're seeing a lot of that. Finally, I said the analysts are really bullish on the autos. They're coming off that now. We warned you probably about 6-9 months ago. I mean, saying, listen, you know, when I bought my daughter's car, the massive inventory that I saw, and then right away when I see something, I could be like, maybe it's just the 3 or 4 places I went to. So having this podcast going out to so many people, you know, and people in the industry were telling me like inventories, and then I started going over inventory levels. I was like, holy shit. You know, I mean, inventory levels are through the freaking roof. They were expecting massive demand. They didn't get it. And you're seeing this among the major auto dealers. So they're getting crushed right now. J&J out with numbers today. I don't know if you follow J&J. J&J is down 10% for the year with the market up 26%. I mean, it's been a really shitty stock. The numbers weren't so great. They were okay, but still sold off. It's down 3% today with J&J. The healthcare industry has not been performing well. We liked United Healthcare, and I think we took we're up a
small
lot
gain.
On it. We took a small gain. We could have sold out a little bit earlier. I think we were up like 20-25% on it. And then we took like a 7% gain on it. But, you know, that fell. And again, that CEO, it's been down since CEO and that happened where he got murdered in New York City. But J&J, I have someone, a close friend that's pretty high up that works there. And they've been laying off employees like crazy. And it's the toughest job because he's laying off friends, and they had to make sure like you have HR next to you. Yeah. And when HR is next to you, they're like, you know, you have to just say it. And, you know, it's like knowing someone for 25 years and saying, okay, make sure you take your things. Okay. And it's not, you can't say anything like, hey, I'm really sorry. None of that shit. It's hard. And they're making them but they've been doing this for at least like the last, I think 6 to 9 months. And that's not a good sign when you're seeing that kind. It's not like the Microsofts and the Metas where they're using AI now and getting tons of productivity and AI agents and stuff like that. I'm going to be talking about that in my, crypto AI newsletter, or our AI newsletter, actually. I have to talk about it crypto too, but AI agents, I mean, you're going to see them take tons of jobs, and it's happening. You're going to see it over the next couple of years, guys. So be prepared. This isn't like fear mongering. Just look it up of what these things do. And just that was a very big theme from the CEO for NVIDIA and his presentation I went to live and stuff like that. And that was a Consumer Electronics Show a couple of weeks ago. I've been traveling a lot. So you know, those guys are laying off employees, but they're laying off employees and productivity issues. This is different with J&J and different healthcare companies. You're really seeing them, you know, a slowdown in their business. So not everything's doing good. You know, you've seen this big separation. Stocks that are doing good. I don't know if you saw Interactive Brokers.
I didn't. I didn't dive through it. I like that company overall, but them and Schwab both did, which just is good for markets and individuals, in my opinion. Just shows the excitement from retail investors.
Yeah, Interactive Brokers. So record high, solid earnings. This is an $88 billion market cap. I was looking at Goldman Sachs, and now that stock went up after earnings. I think it's just below $200 billion. Yeah, I feel like Interactive Brokers is going the route of the Morgan Stanleys. They're not a full integrated, you know, where yeah, they're doing tons of deals and stuff like that. But I could see them going that route because it's such a well-run company. But this is a stock that's over $200 right now. But I saw an interesting stat that came across the wire. And I think one of my friends, a research analyst who's great, that worked at TheStreet.com, very, very smart. Interesting stat that came over for IBKR, which is Interactive Brokers. Yesterday, Daniel, was the highest level of margin they've ever seen in their accounts.
Okay.
Yesterday.
So the risk is on, baby.
It's a risk-on market. Now, take that for what it is. You're going to be like, holy shit, the market's going to crash. Everyone's going on margin. Not necessarily. You're removing a lot of the negatives of a terrible structured economy. You're going to get more deals flowing through. You're going to see more growth in our nation. It's what the threats of tariffs, not tariffs. Everyone's worried about tariffs. We covered this subject in depth in 2018 and told everyone, stop listening to all the bullshit out there and buy stocks on this pullback because it's going to be meaningless because we have complete control over China. China cannot exist without us. Okay, they could exist, but they need us. Okay, we're the biggest economy in the world. Everybody wants to sell to us. They're going to do whatever we want. They're not going to say it publicly like they did, and they're fighting us. And oh my God, you're going to ruin global trade. Remember all that bullshit? It was all bullshit. Same thing now. I mean, if you look at some of the stuff that's happening just by Trump talking, it's kind of amazing. It really is. You can't deny it because people are like, holy shit, right? So now that you have executive orders in place, now that he's threatening with tariffs, now that he's threatening, saying, we could threaten and it doesn't mean we're going to go to war. It's nice not to fight, but just knowing that we will is a very big freaking deal. Don't worry about tariffs. They're not going to crush the economy. It's not going to be a big deal because everybody has to bend the knee to the United States. That's what happens when you have the biggest economy. Does it make us bullies? Yes. Could you get pissed at us? Yes. If you live outside the U.S., do you hate us? Probably. That's not our job to determine that stuff. Okay. You could hold up a sign, protest. I don't give a shit what you do. Our job is to make money on stocks, and it's going to make it much better for the U.S. I think it's going to make it much better for small caps, which has still significantly underperformed. They started catching up towards the end of the year, and they sold off again. You're going to get great opportunities with a lot of these names. You're going to see much stronger growth within the U.S. These companies mostly have their sales within the U.S. You're going to see that grow even further. Do not worry about tariffs. Please don't worry about tariffs. Yes, they're concerned. Yes, you're going to hear about them. You're like, oh my God, I'm just telling you. It's not really in our best interest to do that. But when we do that, countries that we do that to, we hurt them 10 times worse than us. To the point where they have to find ways to talk behind the scenes and say, okay, take the tariffs off and we'll do this, and this, which is some of the shit that you don't hear. And it's exactly what happened in China in 2018. The markets fell. It was a great buying opportunity. We did very, very well. We provide free reports sometimes, which Daniel knows about. That was a free report we wrote. I think it was like 15, 20 pages of how this is total bullshit. Don't worry about it. And it was one of the reports that was downloaded the most in our company's history, I want to say, when it comes to free reports. And so many people came in because of that, and it was fantastic. And we're probably going to do another report that's similar, but please, when it comes to tariffs, this is more of a threat than anything. If it happens, it'll probably be on for just a little while because it's really going to hurt China. It's really going to hurt Russia with more sanctions. It's really going to hurt all these other countries, especially you look at European, South American countries, it's going to hurt them dramatically. And there's no way they could sustain that to the point they're going to have to bend the knee. And when they do, it's going to be better for us. It's going to be better for our companies. It's going to be more jobs here. And that's what he's doing right now. And it's going to result with these tailwinds in our economy that we didn't have in the previous 4 years. And that's why you're seeing everybody get along. That's why you're seeing even the people who are far left in technology saying, hey, all right, we get it. We're going to donate money to your inaugural fund. Okay, well, we get it. We want to be on your side because things could be very, very great for business for them. And that's the biggest thing when it comes to us. It's the biggest things for you. It's the biggest thing when you come to your family because you want to make money on stocks. Try to take the personal bullshit out of it. Okay, right now, the U.S. economy is doing very well with the people who spend the most money. It's not doing great for the bottom third. That's not who drives the economy. It's not who drives a lot of these stocks higher. But to make money in stocks, especially right now, not everything's good. They're only going to be there for you. We're going to talk more detailed stocks, and we can do that tomorrow on our podcast. Again, that's our paid podcast that we love. And it's $10 a month, which if you're going to do it now. Because again, we're going to restructure all of our products and make it more affordable for everyone. But the price tags on the lower ends are going to go a lot higher. But we're going to be offering more services pretty soon. I would say it's going to happen very soon. My publisher is coming down next week so we could discuss it and go over the final things that we're going to do with our publishing business and stuff like that. Because it's, we're growing our consulting business tremendously, but we want to make sure we provide value for everyone, that everyone has access to our services, but also we don't want to be giving our services away for free for very cheap prices because we do have quality research and it's what we love. And you hear a lot of that on our premium podcast, which is every single Thursday. So, Dan, I don't know if you wanted to, I think, you know what? You mentioned something to me before this, which is fascinating and had to do with regional banks. And I want to end on that because that was really cool because I didn't hear anything about this. I was away for the past 2 days on business, 3 days. But you're telling me you heard something with the regional banks. Get into that because that was really cool.
Yeah, I'll get into it tomorrow in more detail on Wall Street Unplugged. But just something to take away here and the value you can get out of this administrative change that we're talking about. And again, can't really point it out as a line item. But help me out here, Frank. I was watching the cabinet hearings. Treasury Secretary nominee Scott Bessent,
I think so,
was testifying.
Mm-hmm.
And
that's right.
It was over a 3-hour-ish Q&A, but it was very informative. You don't have to listen to it because I did. And a couple of things that struck me, again, I'll get into more of this tomorrow, but for all the naysayers or worries out there about a central banking digital currency, CBDC. Scott was quick to point that and say, nope, kibosh on that. We don't need that. I see no reason for that. So that should get that is positive for momentum, in my opinion, because that is a nerve-wracking and scary thing.
That is a scary thing.
What he really said that stood out to me and I think is valuable for investors is he was being questioned by Tim Scott, who is a representative from South Carolina. South Carolina is where from Scott Bessent is from, so they had that little powwow there. They talked about regional banks. And Frank, we've talked about this because Mr. Bessent said the 5 big banks have gotten way too big. And he talked about not only is and remember, this guy is not Daniel Creech walking off the street with a passion for finance. This guy is a billionaire hedge fund banking analysis guy. Mm-hmm. So when he says, hey, I have an opinion on the banking system, you ought to floor to listen to this guy, okay? He is unlike the elected idiots that are questioning him. He is intelligent in talking about this. And he says not only is the banking system strong, but it's probably overcapitalized, which means he hopefully will push for reforms to increase liquidity in the banking system for everybody. And it would be absolutely unbelievable. And I hate to be rude. I don't think this is going to happen because I think the forces are too great. But man, if you can actually get regional banks to grow, and the 5 biggest banks, the JP Morgan, we love the big banksters. We joke about them all the time. But if you could actually get their influence and market share down and the regional banking system lifted up, you would see prosperity across more people in the United States than you have in a generation. And again, it's not just a line item. But just think, if you spread the wealth out, everybody that likes to blame the rich, follow your own cooking, follow your own advice. If you actually spread the wealth out and rising tide lifts all boats, why wouldn't you start in the banking sector? The answer, of course, is because they're corrupt and they're liars and they're not really give a shit about you. That's okay. The reality of it is you actually have a chance. Whether or not it'll happen or not, we don't know. We have to wait and see. But you actually have an opportunity in people saying the correct things in the position of power to actually implement change. Home Bancorp shares, HOMB. We've talked about this a lot. It was a previous recognition years ago. It is one of the best run regional banks out there. I'm going to go into it more detail as podcasts unfold over time. John Allison is the CEO. Him and his family are the largest shareholders of that bank. They just announced a huge repurchase. Take it with some salt. The headline is a lot better than what it actually is, but it's still incredibly bullish. But yeah, Frank, regional banks, I would look for the most well-capitalized. And yes, I'm not being a goofy politician, but stay to the south and southeast because that's where a lot of the regional banking and momentum is, farmland, et cetera, et cetera. But be selective on these guys, but HOMB, Home Bank, is one of my absolute favorites.
I'm going to get to it more tomorrow, but I'm meeting with Frank Trotta and also Rick Rule. So they're starting a new bank called Battle Bank. Raised a little bit of money for it. I wasn't too crazy about the terms of the deal. But I love Frank Trotta. Frank Trotta started Everbank, and that was Everbank. Yeah, Everbank Field was Jacksonville, right? They sponsored the Jacksonville Jaguars, which is great knowing him because, you're able to get very, very good seats. And sometimes I was able to walk out the team onto the field, which is really cool because of him. And he's a really great guy, and he's brilliant. One of the smartest people I know in banking. He's been trying to start this bank, and I'll talk more about it tomorrow, Battle Bank, for I think a year and a half now. And the regulators just were not allowing him to do it. Someone who's done this already, they just didn't allow it. They were just saying, we need this, we need this, we need this, we need this. And now I'm going to meet with him today. There's a conference here in Jacksonville, which is really cool, run by my buddy John Knutson. Very, very good. It's like an industry-wide conference called the FMS. It's like a marketing summit. But they're going to be there as well. And, I got invited to their dinner, which is really cool, to a close friend. And I got to meet with them tonight. I met with them at New Orleans, and I spoke to Frank probably for a half an hour about this. And he was just telling me how, it's an effing joke. Like how, the regulators, they're doing everything they say, just like in crypto, and they'd still come back and say, no. That all changes now. Now this bank's going to approve, and this is a bank that the way he was able to run Everbank into a massive bank and get taken over by TAA-CREF is because of the structures and the different things they were able to do, where they were using, gold as collateral and using, the mining industry to secure loans and stuff. It was just amazing and creative that other banks, they weren't doing this, and he was very creative with that. And I think you're going to see a Bitcoin feature to this as well. Now this bank's going to get approved. Again, it's private. It's probably going to be public in, I would say, 6 months from now. But I'm going to go meet him. I'll talk about it more tomorrow because today tonight after this, I think we'll meet at like 6:30. They have a whole dinner and everything. I'm going to meet with him personally. I think Rick Rule is going to be there as well. biggest name in the mining industry, basically. It's smartest guy you'll ever know in the mining industry. But I'll let you know more about that meeting tomorrow on our premium podcast and give it some deals. But other than that, we covered a lot today. A lot of cool stuff. And I want to add with this, Daniel, is our live event. Again, it's not going to be this Thursday. It's going to be next Thursday. Please attend it. It's for free. It's really cool. It's going to be interesting. And just listen. I'm going to dial it down to give you these certain catalysts that we've been giving people for the last year and a half doing these live events. We did 2 of them, I think, for crypto. We haven't done another one in a while, but this is our first one of the year. You're going to realize why. We're going to give away 2 free names. We're going to have a Q&A. Ask any question. Doesn't matter what it is. Just, again, dial down. People ask about wallets or can I trust Coinbase or are these things going to be insured now with these accounts? And, should I have to worry? And, they'll ask about different cryptos. We're talking to an audience, so we're able to talk about all this stuff. But the Q&A is really cool. And a lot of times it goes on for half an hour. I'm like, I want to get out. And it's another half an hour that goes by because nobody gets off of it because it's fun. We're answering all these questions. So, that's what we like to do for you. If you want to register, just go to CurzioCrypto.com, and it's next Thursday, January 30th. It's going to be awesome event. So that's it for us. Other than that, Daniel and I are going to see you tomorrow. Daniel, any final? I always ask you, and you always say no. So no. Maybe I should say
nope. See you tomorrow.
I can ask you a different question now. Okay. Questions, comments. I got to think about that one. Questions, comments for email. FrankCurzioResearch.com. Daniel, email.
Daniel@CurzioResearch.com.
All right, guys. Thanks for joining us. Love you guys, and we'll see you tomorrow. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. The big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today, and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.